iTeam Value, JJ here, welcome back. Well, today we're going to look at what Mohnish Pabrai has been saying lately. This is actually from the Berkshire meeting in early May. He was talking about intrinsic value, specifically owner's intrinsic value, and what he means by that in relation to Starbucks and Home Depot. So let's get into it. Let's see what he's saying.
And so, a large error rate is pretty normal in this business. Finding the holy grail of the great compounders is few and far between. But basically this particular notion of intrinsic value, I think, is worth paying attention to, especially the notion of owner intrinsic value. And I think the notion of owner intrinsic value can give us more conviction to hold on rather than just basing it on, oh, it's a great business. Because when you look at a great business, so if I take the example of Starbucks more recently, Starbucks was taken out back and shot in the last.
It has been taken out back and shot. If we look at Starbucks share price recently, it's down 30.25% since late April, and then even down more than that, going back. So it hasn't had a good run lately, but of course, over the long term, it's had a very good run.
Last few days, chopped liver. And so is it a business that has secular negative issues in the future, or is it a business that had a speed bump, right? And these things become hard to answer.
That's a difficult one. When a business goes through a difficult time, is it a temporary blip? And Warren Buffett's talked about this. He's bought into businesses that have had temporary blips, and as he's saying, it's hard to work out if this is going to be permanent. If you buy into it as an investor, and it's going to be a permanent loss of capital, which is what you want to avoid, as opposed to temporary, and that's why you have to look at the business. But Mohnish Pabrai is talking about here, thinking about the very long term. Is this business going to be good to invest in for the long term? Just put your money in and not worry about these little blips, these temporary blips.
They become hard to answer these in real time. In the fullness of time, we will understand whether it was a speed bump or something more than a speed bump. So if we were to look at a business like Starbucks and analyze every speed bump, it would become really hard to be able to hold that business for a long time. I was listening to a podcast just before coming to Omaha with Ken Langone. Ken Langone was the founder of Home Depot, and he had multiple great hits. And the interviewer asked him,
as a reminder, Home Depot, that's had a very good run as well. This is going back. It's had 121,000% of all time. So, it's had a really good run, not just recently, but over many, many years.
So, Ken, when you held Home Depot for more than 4 decades, what type of financial analysis did you do on Home Depot, and what was the continuing financial analysis as it went along? And Ken just laughed. He said, I bet on people. And he said, I bet on these guys, and that was the end of the analysis. There was nothing else I did beyond that. He said,
well, that's an interesting take, because if you look at some of the great businesses of all time, if you look at recent years, recent decades anyway, if you look at Amazon, Jeff Bezos, if you'd bet on Jeff Bezos and what he'd said in those early original investor letters, which I heard a podcast the other day about that, going through his letters, right back to the first one or two, the first few, that he did think about and say that they were going for long term. And so it was really a bet on him, on the entrepreneur. And if you'd bet on Steve Jobs and Apple, even though, if you look back at the history of Apple, he got kicked out of the business and then he came back. So that was a really tough thing to do. And, the great entrepreneurs, a lot of people are betting on Elon Musk, even though he's definitely a flawed human and, sometimes stretches the truth. And, sometimes there's a fine line, but if you bet on him, say with SpaceX and way back in Tesla at the beginning, you would have done well. So that's what Mohnish Pabrai is talking about here. There's the quantitative analysis, and this is quarter to quarter. Sometimes even on news channels, month to month, week to week, day to day, and I do follow those myself just for entertainment purposes. And I do have a stock channel, Stocks Today with JJ. If you want to join that, I'm doing daily news, reacting to daily news, and it's just fun to do and to see what people are saying. And it's more for to see the folly that goes on in the financial markets more than anything else. But do join, to subscribe there. It needs some love. It's a new channel if you want to follow along day to day there. But that's what Mohnish Pabrai is talking about, being in it for the very long term. Let's see what else he's got to say about this in relation to Starbucks and the founder of Home Depot, who had more than one good investment.
He said he's been married to the same woman for 68 years. She still puts up to him with him, and he says that the mental framework he uses to stay married to the same woman and the framework he uses to hold on to the Home Depot stock are both the same. Basically saying that he's all about loyalty. So he says, if you want my framework, it's loyalty, and that's it. And
that's an interesting way of putting it in terms of marriage, long-term relationships, and long-term relationships with a company. Loyalty to a company or brand. Not many people invest for the very long term. As I said, Amazon. If you'd invested in Amazon, even at the height of the dot-com bubble, you would have done well, but you'd have to hold it for a very long time. Same with Microsoft, and Mohnish Pabrai has talked about this before, that Microsoft was a bad investment in the dot-com bubble. But if you had just done the coffee can approach and just invested in it from time to time along the way, you would have done very well with these companies. But they are, as he also said earlier on in this talk, that the great compounders are few and far between, and they're actually hard to find. So there's always going to be mistakes. You're not going to get a 100% hit rate. Even Warren Buffett hasn't got that. He's bought and sold quite a few stocks over the years.
The guy had multiple 100-baggers in his lifetime, multiple companies that did extremely well for him, all because of inactivity. And he talked about some businesses that we've never heard Ken Langone having a stake in. He had a stake in Eli Lilly that came about when they bought a business that he had ownership of. And just, inactivity, never did anything. I think that was like a 40-bagger for him, just on the side, while Home Depot was going. These are like other bets on the side that are happening. So this, I think that when we try to think about intrinsic value from the perspective of an owner, even if we are not an owner, if you think about it, so if you had a small ownership stake in Starbucks, but you thought about it the way Howard Schultz would think about it, for example, then I think your lens.
It's the founder of Starbucks who, if you think about a founder, stocks are slices of a business, ownership of a business. So thinking about it as an owner, I think that's what Mohnish Pabrai is talking about here. Obviously, with big fund, there's more of a slice, but even retail investors, if we think about it as being the slice of a business, whether it's Starbucks or Home Depot or any other great business that has been over the years, and new ones coming up, say small caps that could be big businesses one day. And by the way, this is not investment advice as usual here. I'm not giving investment advice on any of these companies, any of these stocks. You do need to do your own work and get professional investment advice from a licensed professional, which I am not. This is just for general entertainment and general education purposes only. But it's definitely educational to listen to what Mohnish Pabrai says in these talks, which he gives quite frequently lately.
Lens will go out further. It'll look out further into the future, and you might be able to see things that a quantitative analysis is not going to show you. And so, again, just to take a step back, basically, this is the limit of what I have to talk about to you today on this subject. Given that I've talked to you, I'll reflect back and try to improve on the next time I talk about the subject. But I'd like to switch to another subject.
Okay, that's all I was going to say about that. So we'll leave it there. That's plenty to think about for sure. Just that concept of owners' earnings and intrinsic value, not just quantitative, not just the numbers. It's more qualitative. Is this about the entrepreneur, about the business for the long term? So what do you think about that? Do you think that's worth thinking about and that is important as what he's saying there? Let me know in the comments what you think. Now, I also talk about this kind of thing on Patreon. If you want to I'll put a link in the description to the Patreon if you want to go and check that out sometime. I give a weekly investing update, which I'll be doing after this video for the week as it happens. So if you want to do that, I'll see the link in the description and I'll see you over there. And thanks to everybody for watching or listening to this one. And I'm going to put a link on the screen also for those watching on YouTube to a video that YouTube thinks that you should watch next. So go and see that now if you want to. Thanks to everybody for watching or listening to this one, and I'll see you in the next one.